Good evening to all our mentorship traders. Start of a new month. We are on the 2nd of October 2020. It was a national holiday for all of us here in India. Friday evening, 9 p.m. As always, we'll be talking about how the market fared last week, what are the levels to watch for, and what to expect going forward. I have the trading view screen in front of me, wherein I'm using the daily and the 75-minute time frame. So I also welcome all the newcomers who have joined in over the last week. So what did the Nifty do? So on my left-hand side, first, let's zoom this out and talk about the market from a daily perspective. So what we have is these levels which I had drawn recently. And out of them, the first one, which was at 10,800, 900 levels, held really well. And we have a pretty sharp bounce back, which is almost takes a shape like a V. This sell-off, this sharp sell-off that you can see here, did come from the anticipated zone of resistances, which came from this channel border. Now, this channel, of course, is rising, and it's a border which is significantly up here. So that's little far-fetched right now. But a couple of important points that we should keep in mind. Number one, the market had corrected from anticipated resistances. So this is a meaningful correction. This is not just a one-off correction. And another point which is equally intriguing is the nature of the next bounce back. That is the bounce back that we had last week. Quite impressive. It was quite impressive. Many sectors and stocks kept on stretching itself further up and beating all the resistances. This we can clearly see from the 75-minute time frame chart over here. This is the Nifty 75-minute time frame. If I remove this for the time being, you would remember that the market was consolidating 10,200, 300 zone mid this week, and these are the levels which I had marked, where there was a confluence of the 61.8 Fibonacci number, and the market took this resistance with the help of a gap up that we saw on Friday. So if you allow me, and if I remove these, then this is, yes, now this is how it looks at the current juncture. The index stopped at the 78.6 Fibonacci retracement, which to some extent coincides with previous supports, though very short-term in nature, these lows. And this move has been really, I would say, surprising. It's been really sharp. Now, considering the way the Dow Jones futures had sold off, considering, if you allow me, then I can quickly take a look at the SGX level also. It's trading at, let's take a look. In the morning it was, so it's managed to bounce back. There you are. So it's managed to some amount. It's trading at 11,400 levels. So going back to your Nifty, if we get any kind of ease off, sell off early Monday morning, okay, if at all, and if this chart, this 75-minute chart, the highs that you see here right now at 11,444, if the market opens somewhere lower down here, then we can work from a short-term perspective. We can work with a channel like this. This channel will only be valid if on Monday this level, 11,444 levels, is not breached on the upside. If this price goes further up, then this channel is not valid anymore. So I'll keep this channel for the time being, and we'll see how the market behaves, whether it manages to extend further up or not. If it extends further up, then as you can see very clearly from this chart, the 11,600 zone is where we see the next zone of resistance or some amount of supply coming in. That's the previous swing high. Impressive, I would use the word impressive. With the bounce back that we've had, typical turn on a dime. Very clearly, the markets are not willing to give away so easily. But the sell-off that we saw, this one on the daily chart, was equally impressive from the bear's perspective. So I would say we are in a market which is tough. I would use the word tough. UB have a bias on the long side or on the short side. There's definitely trading is not going to be easy, and I don't think so it was. Going forward, I think volatility will stay. We'll work with the levels of 11,500 as the short-term resistances, and then 11,600. If it drops further down, use 11,300, which was your resistance. 11,300, which acted as a pretty good resistance, will now act as a support. It's 11,300 which will, to some extent, decide the future of the bears. I feel so, because if the market slips, if 11,300 gets tested, and if it breaks 11,300 and comes further below that, then this entire positivity that we have seen over the last 4 or 5 days will come under a big question mark. If that doesn't happen, if 11,300 holds and the market continues to find some support as it dips down, then I think it will break further up towards 11,500, 600. Yes, it is stretched, but that's the nature. It's getting stretched both on the downside and getting stretched on the upside also. Let's take a look at the sectors. How did the sectors fare last week? For that, I'll take you to the Stock Charts website. It's easier for us to visually see. And then we come to, we'll go to my dashboard, and under the dashboard, we'll have, okay, am I missing out on something? Wasn't it supposed to be right here? Yes, I think they have made some changes. So NSE sectors, I click on it, and then I will change it to RRG. This slight change to their dashboard. So let's look at from a 1 week perspective, should we? Let's compare in terms of the Nifty. Let's update it. Let's sort in terms of percentage change. All sectors performed positive, media topping it, followed by the banks, Nifty Bank, Bank Nifty Financial Services, mid-cap, metal, auto, small cap. So good thing to see that all the gainers, the top gainers, which is, let's say, this part of the list, if you look at the tails, they're all leading or improving. So there is no underperforming or weakening sector which topped. In fact, the underperformer and the weakening sector are still in the weak zone. If you see pharma, energy, and FMCG. PSU Bank, which is an improving one, however, couldn't take it up. But private sector banks is right up there. So we can see this divergence, we can see this difference now. The markets are favoring more of the private sector banks than the PSU Bank, at least in the recent bounce back. If you look at the tail now, if I remove all these drawings and increase the tail of these graphs by, let's say, 12 weeks, and if I fit it, so if you look at the tails now, and if I sort in terms of tails, we have the small cap, the IT, the auto, media, metal, mid cap, and commodities in the leading zone. Small caps gaining strength and momentum. IT is right up there. Auto slipping a bit on the momentum, but very much in the leading sector. Media is picking up thanks to PVR. Metals right up there, losing a bit of momentum, and commodities. So everything looks fairly all right. So it will be interesting to see these sectors. Remember, the PSU banks, the private sector banks, the Bank Nifty and financial services have been in the improving zone for quite some time. Ideally, the theory of RRG graphs should see them flow like this. But if you remember, I've told you that it's not always the same way. At times it dips down, picks up again, dips down, picks up again, and finally takes it. Ideally, from improving, it should go to leading. That's how it is. From improving, it doesn't go back to lagging and goes back to weakening. That it doesn't flow that way, never flows that way. So it is the banking and the financials, bank nifty, real estate, financial services, and private bank. This is an important pocket, around, I would say, 33% weightage, close to 35% weightage. This is an important pocket which is in the improving zone for quite some time. For almost 12 weeks, you can see the entire tail, the entire blue line from the start to the end. It means 12 weeks. We're looking at 3 months. It's been within the improving zone, which means that going forward, this pocket has to buckle up, has to pick up, has to support the index like it did on Friday. Friday's opening, like it did on Wednesday. Wednesday's opening and Wednesday's close had a very, very different sectoral movement. The morning show and the evening show was very, very different on how it played out on Wednesday's trade. Pharma, though it has the relative strength, is now gaining some amount of momentum, but it has been volatile and it's still weakening. So is energy, FMCG, and consumer durables are not looking that great. So I would say that the focus on the improving lot needs to continue, because this is the one which can surprise us a little bit. And of course, buy on a dip, that's something we can have from the leading sector. We should look to buy on a dip, especially stocks from the auto and the IT sector. Now let's quickly take a look at these sectors and figure out which are the ones which are in a support or can be walked as a prospective buy. It's going to be very different, because last week, Friday session, when we were discussing this, you remember that most of the sectors had slipped into a downtrend, was hitting their 2 standard deviation or 3 standard deviation, which is the bank or the mainland. And I was suggesting that it should give us a short-term bounce back, and then swing traders can look for a shorting opportunity. Now, it has given that bounce back. You can see that very much there on Bank Nifty. It has entered the river. If we look at auto, it has definitely entered the river, and it's inching, trying its best to go above it, but auto is likely to face some resistance. Look at this zone. Auto is definitely likely to face some resistance. So auto, look for a dip to buy, or someone can look for a swing opportunity to short also. Commodities, it has entered the river. Consumer durables, same story, exactly the same story in most of the sectors. It was in a downtrend. It is in a downtrend, most of them, because to go in an uptrend, it needs to go outside the river on the other side. So they are all shaping up as a prospective calm down or a swing short candidate. So is FMCG. FMCG is fairly weak. Which are the sectors which have got themselves short-term overbought? IT is extremely strong. It's the one sector which is in an uptrend, but it's likely to face some resistance back to its previous highs here. I can see some overbought conditions on my short-term momentum indicators down here. So IT is stretched. Media, it's primarily PVR and Z that does the movement. Metals, same story. So what I think, let me take a look at the next page and then I'll conclude. Pharma, this will be interesting because pharma is still in an uptrend. It went outside the river, came inside the river, and then gave a bounce back. So pharma and IT are still in an uptrend. IT in a leading quadrant, pharma in a weakening quadrant. That's the difference. PSU bank is definitely not in the picture at all. Still very, very weak. So is real estate. It's bouncing back, and small cap is at the other end of the river. So I'll quickly share my thoughts when I look at these sectoral charts in respect to the river and the structure of price. As per the rules of the three river system, they are all in a short-term downtrend, and they have gone through a short-term bounce back after the downtrend. Except barring IT and pharma, all of them are still within the river, and they are yet to reverse the trend on the upside. This is very fertile ground. This is a very apt situation for a swing short. Okay, so a swing trader would look for opportunities from the daily time frame for a short-term swing down, and for that, it's across the board. All of the sectors are bouncing back. But if I quickly take a look for you, Bank Nifty is definitely one which is there. Auto marginally there, yes. Commodities is not overbought yet. Consumer durables, very much yes. Energy, no, energy is weak. Energy has not managed a decent bounce back. Financial services, yes. This is your Bajaj Finance, Bajaj Finserv, etc. FMCG, to some extent, yes. IT is completely bullish, so we're not looking to short that. Media, let's not talk about it, Z and PVR. And metals, not at the overbought zone yet. So it's a space where few sectors have some upsides. The controversy comes from the banks and the Bank Nifty. Remember, just a couple of minutes back, we were talking about the RRG charts, and they're in the improving quadrant and they should pick up. And when we look at the charts, we see a downtrending sector bouncing back. So which means that if it slows down, it can be a short-term dip, not a very long fall. That's what I can sense if I combine the view from the RRG and the charts. If I combine them, that if the dip comes, the dip may not be a big one, So we would look to further buy into it if the dip comes. But considering, going back to the charts, considering the way the index has bounced back, the gap up on Friday, coming out of complete breakout gap, a runaway, and closing at the highest point of the day, considering we have a kind of an event which might lead to a little bit of SAR opening on Monday, keeping all these things in mind, it'll be an interesting, very interesting week ahead. But I will not be surprised if the Nifty slows down and touches 11,300. If it does and holds, and then if it finds itself back to 400, 450, then you have a far better chance of 600 and further up. Overall bullishness stays. Let me conclude by looking at the weekly chart of the Nifty. This is the weekly chart. Overall, what we have noticed last month is a bounce back from the sharp sell-off that we saw in the majority part of September. This weekly sell-off. So overall, we are still within this sharp rally mode, and this will be looked as a short-term correction to this sharp rally mode. So the bullishness definitely continues, and it will be interesting to see what the market has in store for us next week. Strategically, I would use the word cautiously bearish in the first half, and if the correction is not there or the correction is shallow, then cautiously bullish. So first half I'll be a little bearish, looking for shorting opportunities, and if it comes and if it holds, then I will again look for opportunities to go long. That's a very mixed kind of a view, not having a bias on any particular side, but that's how it is right now. That's what I feel. So I conclude my weekly analysis of the sectors and the Nifty here. We'll move ahead and talk about your trades and the doubts and questions that you may have. So let's begin tonight's interactive session.